Today I would like to analyze McDonald's. They have a very interesting business model and they have 55% of the restaurants is a conventional license. This means they own the real estate and the building, so they will get the rent, but they also will get the royalties. The next thing would be the developmental license. This means they would just get the royalties, they're not owning the building and the real estate. The next thing would be foreign affiliated. This is 20% of the restaurants. This is where they get royalties, but also they have the equity in the earnings. And the last thing would be 5% of the restaurants where they own the real estate, but they're also operating the restaurants, so they will get all the operating profits. If we take a look at the chart, we can see in 5 years it's close to up 30%. So it's down from the all-time high about 6%. So if we want to take a look at the financials, we can find out if this company is a good buy right now. So the first thing we can recognize is the market cap of $199.77 billion. So this is a big company. It can mean they will have difficulties to grow more in the future. We can also see the dividend yield of 2.4%. This is not great, but also not too bad. I think over 3% would be more interesting. So let's take a look at the financial foundation. The first thing we are looking for is revenue growth. We want to invest in a growing business and not a declining business. So we can see here in 2019, it was over 21 billion. And in 2020, it declined because of COVID, which is very understandable. But then it increased again. And we had this small decline again, and now it increased again. So we are up over the 5 years. So this would be a check here. The next thing we are looking for is free cash flow growth. This is very important number because this is how they pay the dividends and also can buy back shares. So we can see here in 2019, it was $5.73 billion. And then it decreased in 2020 because of COVID, but it recovered again. And now it's up over the 5 years with $7.25 billion in 2023. So this would be a check here. So we had the growth over the 5 years. Now we are looking for the free cash flow yield over 4%. This can also show us something about the valuation. So if it's under 4%, it could mean the company is overvalued. So we're going to take the free cash flow here, the 7.25. And we're going to divide it with the market cap. And then we will get the free cash flow yield for this company. Okay, so this is about 0.03629, which means 3.629%. So this is the free cash flow yield. It's under 4%. And we don't really like to see that. We would like to see that over 4%. So it's not a check here. The good thing about this free cash flow yield over 3.6% is that we can pay the dividends, which is 2.4%, so we can pay it easily. So we could also use this money to buy back shares. Now we want to take a look at the debt to free cash flow ratio. We want this to be under 5. This means we can pay back the debt with our free cash flow in under 5 years. So it's a very important number for us because if a company has too much debt, it also can risk to get bankrupt. So we don't want this. So we can see here the short-term debt is 2.88 billion. So we're going to take this, and we're also going to take the long-term debt, which is around about $50 billion. So we're going to add this. And then we're going to divide it with the free cash flow that we had, 7.25. And this will give us the number 7.29. This means in a little bit over 7 years, we can pay back the debt with our free cash flow. So I think it's a little bit too much. We would like to see this under 5. So it's not a check here, but it's also understandable because McDonald's is a real estate company as well. They're not only the restaurant company, they are the real estate company as well. And real estate companies usually have more debt. So it's understandable that this number is higher than 5. But still, we would like to see it under 5. It would be nicer for us. Now we can take a quick look on the cash on hand they have. This is the money they have in the bank, $4.58 billion. So this number they can use to invest in their business, to pay the dividends, or to buy back shares. This number is not so great. It could be more in some other companies, but it's not a bad number. So they at least have some money in the bank. We can see in 2019 it was not so much. It was just close to 900 million. So now it's over 4 billion, which is a better number than before. The last thing we are looking for is shares outstanding decrease. This means the company buys back their own shares. So this can improve the stock price. So we can see here McDonald's did buy back shares over the last 5 years. Actually, they bought shares every year, as we can see here. So this is really crazy, actually. I don't see that so often that a company buys back shares every year. So, but it also means that at some years they bought back shares expensive. This is sometimes it's not a good thing, because we would like to buy them the shares when the company is undervalued. But it's also interesting thing, because this can really help the stock price to increase. So it's a check here. So I would like to give my conclusion about McDonald's. So let's start with the good things. They are a very famous brand. Many people know this company. Many people go there every day. This is a great thing. The next thing would be increasing revenue and free cash flow. So over the last 5 years, they could increase the revenue every year except of COVID. They also have the increasing free cash flow, which is great, because this is how the company pays the dividend. The dividend also looks safe with 2.4%. It's not very high, but it looks safe because they have enough free cash flow to pay this dividend. They own a lot of real estate, so this company is not just a restaurant company. They also own the real estate, and they get the rent from the restaurants. So for me, the negative thing would be high valuation. So personally, I think McDonald's is high valued. I think at the cheaper point it would make more sense. So maybe under the 230 range, 230 US dollar. So I also think McDonald's has a lot of debt. This can also be difficult with the higher interest rate they need to pay. And the last thing would be boycotts. So I think many people also boycotting brands like McDonald's nowadays. So we have to keep this in mind as well. So I hope you liked the video, and please don't forget to subscribe and like the video.